Alright, so guys, Jeff here. Today's Thursday. We went through a few earnings last night, but I didn't because I kind of fell asleep at about 2. But anyway, I woke up early this morning to go through the Facebook, the Meta platform's earning, which is crazy, which is absolutely crazy. Okay, I'm going to show you guys what I actually said from yesterday's news. Okay, this is what I said from yesterday's news. Okay, just listen here. Facebook is very important. Again, is for us to look at ad spending because that's where people spend most of their ads money. Facebook and Google AdSense basically. So Facebook is going to be very important for us to look at. Afterwards, we want to look at Facebook metaverse investment into R&D. That's going to be a huge one as well. And afterwards, we have to also look at monthly active user and daily active user for Facebook. Okay, for meta platform, it's going to be important because it's not only just going to be Facebook, it's going to be Instagram, it's going to be WhatsApp. Okay, these are going to be important for meta platforms because this will actually let us see the amount of recovery that is happening back in society. Okay, so basically, I sped it up for you guys so that you guys don't have to listen to this whole thing where I actually drone on and on about the whole Facebook situation. But what I said is ad revenue, which is very, very important for Facebook. Okay, active users, which is going to be huge because I also think that the users of Facebook would definitely be going up as well. Okay, it's not just going to be Facebook because it's also Instagram, WhatsApp, and such. And look at, because one of their strongest rival right now, which is TikTok, is definitely kicking ass right now. But for Facebook, surprisingly, they did miss on ad revenue, and they missed on, well, they didn't exactly miss on the metaverse investment wise. But over here, I'm just gonna, let's go some news today. Let me just continue that first. Okay, but anyway, over here you can see, okay, added more users than expected, but posted its slowest revenue growth since going public a decade ago. So this actually brings up a lot of concern for the market because right now we're thinking it's kind of showing the same sort of forecast as Netflix. Okay, sounds familiar. Okay, Netflix also posted something similar, which is basically losing subscription for the first time in a decade. Right now, Facebook is possibly going to be doing the slowest revenue growth since going public a decade ago as well. So I think that's going to be adding some form of a pressure. But of course, right now, Meta Platforms is up. Okay, Meta Platforms is up 17%, 17%. Okay, but yeah, you might want to think that 70% is great and all. Okay, you might think that it's good, but at its high, Meta Platforms was a easy $400 stock. Right now, it's at about $204. So right now it's still down about 50%, 60% or so. So of course we have to get into the nitty gritty of things. Okay, so over here you're gonna see. The company did cite that the war in Ukraine is a contributor to the revenue slowdown. Definitely, because with a war happening, people are not gonna be willing to spend money on ads because businesses are not running as well. The market turnover is not going to be as fast. There's no reason for you to put so much money into ads, and the reason, and of course, from there on, then it also becomes the people who are going to be using Facebook is going to be a lot less as well. So there's going to be a lot of things that actually adds up to that. Over here, you can see. My bad. Okay, to combat rival TikTok, which Zuckerberg cited as a rising trend, the company said it would more actively use artificial intelligence to recommend content to users from around the social network as opposed to populating their feeds mostly with posts from friends and family. I think that this is a huge change for Facebook because Facebook kind of started off as a friends and family sort of thing where you kind of just able to communicate with your friends and family, of course, with your family friends, all the schoolmates that you actually hung out with in the past and such. But right now, the thing is that Facebook have to move forward, especially with what TikTok has actually brought to the table with the For You page. Okay, For You page is such a huge thing that kind of changed up the whole entire algorithm in the whole social platform side of things. Okay, with TikTok actually coming in with the For You page, basically you're only going to be seeing the top grossing content, and of course, there's going to be a small, a very, very small percentage of those lesser viewed videos that's going to slip in somewhere in between, but that's kind of how the algorithm is going to be working. I think that what Zuck is actually doing is thinking that most likely Facebook Reels and also Instagram Reels will most likely be getting in this algorithm into their Reels as well. But I do think that at the end of the day, I do think that Facebook would still need to encourage friends and family posts to still be left at the top or something along that line, or at least create a system where you can have a friendly merge, where you are going to see maybe 2 posts from your family or friends, and then you're going to see 3 posts from interesting content and things like that. I do think that that's very, very important, because ultimately, if Facebook is just going to completely change their entire algorithm to just show top grossing, the most entertaining videos and such, then no one's going to be using Facebook anymore, because there's no reason for me to be using Facebook. Okay, there's no reason for me to be using Instagram if everything I see are not something that I'm not someone who's related to me. Especially for myself, I do use Instagram every single day. I use Facebook from time to time, but like I do think that if we suddenly have a huge shift for Instagram where we basically only see entertaining posts and not anything about our friends, it's going to be a little bit weird. Okay, and I would think that I will be more inclined to use TikTok if that would be the case, because TikTok already have so much of an audience base, and I do think that a lot of people much rather create content on TikTok as compared to your Facebook Reels and your Instagram Reels. So yeah, I think for my own personal opinion, okay. So yeah, afterwards we have to talk about this, which is reality-led units. Okay, they're talking about the metaverse. Okay, the unit revenue came in at $695 million, ahead of $683 million analysts were expecting, which is great. Okay, which is great, because this unit lost nearly $3 billion from $1.8 billion a year prior to the company's ramp up. Its investment in those areas, analysts has been expecting a loss of $3.6 billion. Just last quarter, they actually hit $10 billion of losses, which is why we basically thought that, with the whole metaverse investment, it's just going to be horrible for meta platforms. But this is going to kind of change up for Facebook a little bit. So the 3 things, remember I talked about the 3 things for Facebook, which will be ad revenue, it's going to be your metaverse investment, and afterwards it's going to be your active users. Active users actually went up, so very, very good. The next one would be metaverse investment, which is starting to show a little bit of revenue income, so it's pretty good. Okay, and the next one is ad revenue, which I honestly think that for the ads revenue side of things, for 2023 and 2024, I do think that we are going to see a lot more advertising happening, because how it kind of work out is that for the entire economy, we kind of, okay, let's just say we started from here, okay, and then it kind of just went up right after the pandemic. Okay, we hit a low, okay, and then we just slowly went up and up and up and up, and then right now we actually kind of hit this moment here, and then we just started to go back all the way down, be it from your tapering of your bonds, be it increasing of rates, be it recessionary fears, be it Ukraine, whatever it is starting to go back down again. Okay, and we finally find so-called like a support line or such. Okay, when we actually hit that support line, okay, when we hit that support line, what actually happens is that businesses will start to be more carefree and more risk on with their money, with their assets and their capital. Okay, that's when a lot of the companies will start to be like, you know what, maybe we can do more ads on Facebook for this product. Maybe we can do more ads on Google for this product. Maybe we can do more ads via influencer and things of that nature. So I do think that marketing is going to have a huge ramp up in 2023 and 2024 after we kind of find a bottom of the market. Okay, but we are still trying very, very hard to find the bottom of the market right now. Okay, for the SPY, let's be honest, we drew 440, 430, 420, 414, okay? And they have broke all 4 of these support lines, okay? I bet they actually hovered around the 4 lines quite a bit, but they broke all 4 of the lines. So right now, we cannot really tell if we are hitting a bottom of the market or if we're just rebounding from the euphoria of a good report from Facebook. Okay, so I'm not sure if this is going to be good for the market, but ultimately, right now, I'm looking at it, and personally, because I'm invested in Snapchat, I'm invested in SoFi, I'm invested in Tesla, I'm invested in Palantir, whatever it is, tech stocks. With what Meta Platform actually did for us, okay, all the other tech stocks are all going to go up, which it evidently went up. Okay, Snap is up 5.2%. Tesla is up almost 3%. Palantir is up 3%. SoFi is up 2.2%. So all of them are basically up almost a little bit like a sympathy play sort of thing. Because with what Facebook actually provided us with this earning is give people the spirit and the support that you can actually get back into those risk-on asset. And a lot of time we actually like to label the risk-on asset such as your tech stocks, your growth stocks. Those are usually one of those very volatile risk-on asset. And of course, you're also gonna be spreading it over into the cryptocurrencies scene as well, which is why even for Bitcoin is trying to get back up to the 40K region again. Okay, Ethereum getting back to the 2.9, past 2.9 and going towards the 3K region again. Okay, Terra Luna getting back to the 92 USD region again. Pretty good. Okay, we're starting to see a little bit of a rebound because of Facebook, which is why I said that the FANG actually is very, very important for us to really look at the earnings. Today, we're going to have Apple, we're going to have Amazon. Okay, these two, same thing. I already should explain my own expectation of what is going to be happening and what I will be looking out for these two earnings that's going to be out later in the after hours. I think those are going to be very, very important. And of course, afterwards, with Amazon, we also have to take into consideration of one extra thing, which is Rivian Motors, which is one of Amazon's biggest investment. And what happened last quarter was Amazon basically added in the investment in Rivian and said that, because we are invested in Rivian, that's why our EPS went up 7 times. 7 times more than the expected EPS, which was kind of fraudulent to a certain extent in my eyes. So yeah, I am a little bit worried for Amazon, because the thing is that if Amazon wants to pull anything near that level of Rivian or whatever they pulled last quarter, that's not going to work, because Rivian is almost going to go bankrupt. Rivian is at $32 or something along the line. Rivian, yeah, at $32, at $32 for Rivian. Okay, back then, last quarter, Rivian was about $80 or $60. That's why Amazon can say that, yeah, Rivian's doing great, which is why our EPS went up. There's nothing for Amazon to really go crazy right now. But of course, those are still some of the factors that I will actually be looking at. Okay, but I'm going to be serious right now. Okay, I'm not going to be surprised if I see Amazon miss on earning. And when they miss on this earning, okay, chances are they are going to fall by a good 6 to 8% or even 10%. I actually see that happening. Okay. And if they beat on earnings, I'm not gonna lie, even if they were to beat on earnings, maybe 3%, maybe 4%. I don't see Amazon beating earnings by huge margin as compared to what happened last year. What happened last quarter, which is last year, basically. Yeah. So I do think that that's going to be a little bit tough for Amazon. But nevertheless, Amazon is still going to be a very, very important company for us to really go through the earnings with. All right. Now, let's just go through a little bit more light-hearted stuff, which is Elon Musk on Twitter. Okay. Kind of funny. Okay. I'm not going to lie. Kind of enjoy it a little bit. Okay. Let's start from over here. Okay. Basically, him just talking about free speech. Okay. The extreme antibody reaction from those who fear free speech says it all. By free speech, I simply mean that which matches the law. I'm against censorship that goes far beyond the law. If people want less free speech, they will ask government to pass laws to that effect. Therefore, going beyond the law is contrary to the will of the people. Basically, this is just him kind of solidifying his stance on free speech, especially with what he's trying to do with the acquisition of Twitter. Okay, something a little bit funny is over here, which is the Truth Social is currently beating Twitter and TikTok on the Apple Store. And for people who do not know, the Truth Social is basically a social media platform that was created by Trump's administration team, and they are currently listed in the I think it's NASDAQ or NYSE under DWAC, which is Digital World Acquisition Corp or something along that line. It's a SPAC, but yeah, they actually went through the whole merger and things like that. So the Truth Social, if you're interested in investing in the Truth Social, I guess not financial advice by any means, because that stock is going down. DWAG is currently at about 40 $46. Pretty good, surprisingly, $46. But yeah, over here, he said, Truth Social, terrible name. Like I said, I do think so as well, okay? Because Twitter censored free speech. Should be called Trumpet instead. I thought that it was so funny. You know what? I'm just going to retweet it. It's so good, okay? It's so good. Because the thing is that, yeah, it's true. If you call it Trumpet, and just imagine this, okay? The Truth Social, if you change it to Trumpet, and every single time someone you follow, okay, talk about something, post something, okay, they're just gonna in that trumpet sound, and they can probably find a copyrighted one for it. Man, I'm just saying. Okay, something funny. For Twitter to deserve public trust, it must be politically neutral, which effectively means upsetting the far right and the far left equally. Of course, we all understand that. Okay. The next year is going to be a little bit funny, okay? Next, I'm buying Coca-Cola to put the cocaine back in. I'm not sure if Coca-Cola actually went up on this news. Let's see, KO. Let's see at KO. Okay, well, it didn't really went up. About like 0.7%. Nothing crazy, okay? But something that's funny is over here, okay? Now, I'm going to buy McDonald's and fix all the ice cream machines. Listen, I can't do miracles, okay? I just thought that, it's just a little bit funny games with Elon Musk on Twitter. I genuinely enjoy this kind of thing. I think that, Elon Musk is really... I don't think that he's trying to make this as a very, very serious thing where he's trying to just take over a company forcefully and such. I do think that at the end of the day, there's going to be a lot of people saying that, the billionaires are just kind of being able to do what they want because, with that amount of wealth, they can basically just buy over a company and just say, yeah, we are just going to do it our way, that kind of thing. Honestly speaking, I do think that Twitter was quite bad, but honestly speaking, because I don't really care about free speech to that extent, because I'm not American, so I don't really care. So I don't really see why was that good, being one of the most the highest value acquisition as of this year, So I thought that it was pretty cool. All right, by the way, let's move on to the last news. The last news is going to be something that we actually talked about in the past, which is Archegos founder Bill Huang, the former CFO as well, charged with securities fraud. So I talk about the whole Archegos arc a lot. I think this was pre-YouTube, where I was talking on Instagram most of the time. I talk about the Archegos arc, and I thought it was really, really funny because basically Bill Huang is just this degenerate, and he borrowed money, and then he kind of bought into Discovery, and then afterwards he used the stake that he had in Discovery to borrow more money from Credit Suisse, and then Credit Suisse loaned him the money, and then he used that money to buy more Discovery, and then he kept on doing the whole margin trick, and then eventually, like I think one of the bank kind of gave way and said, you know what, you have to give back all the money, and then he had to force a huge sale, and then he kind of just crashed the Discovery stock down like 40% in a day or something along that line. A little bit funny that they're still talking about this whole situation with securities fraud. I was certain that this was already closed, but yeah, I guess there's more news on it. Let's just read it a little bit, okay? Archegos collapsed in March of 2021, leaving banks with more than $10 billion in losses and sparking calls for more regulatory oversight. More than $100 billion in stock market value vanished in a matter of days. So yeah, you have to understand that the thing is that because how the market kind of works is that, even though it's just $10 billion being taken out of the market, that's going to create a lot of selling pressure, which can easily tenfold the situation. How buying pressure and selling pressure work is kind of like a snowball. Okay, just think of GameStop back in the January of 2021. It's the same thing. Okay, buying pressure, it can kind of just snowball, but in that term, it kind of snowball upwards. Okay, a lot of buying pressure created more buying pressure, and people who were shorting it had the urge that I have to close off, hence more buying pressure. And it's going to be the same thing for the selling pressure. It's the same thing. Okay, more people want to sell it, more people want to short it, or people who already bought it think that, you know what, I have to close off my position, and then they quickly sell at a lower price. more selling pressure create more selling pressure, kind of like a snowball, but this one is downwards. So yeah, $10 billion is good enough for you to actually destroy $100 billion in stock market value in a matter of days. Pretty interesting. But yeah, basically, it's just kind of like a conclusion of what actually happened with the whole Archegos arc. If you're really, really interested in the whole Archegos arc, you can probably read it somewhere. I'm not sure if I have a video on it. I might, but I'm not very, very sure. But yeah, I just thought that this was funny because this actually happened around the same time as the whole GME AMC saga. So people were like chanting like one of us for Bill Huang, because basically we're just doing the same thing as all those apes. Basically just kind of YOLOing into all the stocks and such. But anyway, that's all I have for today. I am gonna go out for dinner with my parents. So thank you guys so much for watching. I'll see you guys tomorrow.